Hey traders, Raghee here, and in this video we are going to cover the non-farm payroll. We've been waiting for it all week and it's finally here. There's a couple things that we're carrying into this hot zone. Number one, the ADP number knocked it out of the park. So traders are already probably expecting a pretty big non-farm payroll tomorrow with the ADP having printed 253. You can see it was a huge beat over the previous and a huge beat on the expected. So a little bit of anticipation, positive anticipation here with NFP. The other thing, and this is where a lot of traders are probably getting the narrative a little mixed up, is, gang, June is on the table. I'm not going to say June is a done deal, but June is on the table, meaning when you look at Fed fund futures, they have continued to trickle lower. What does that mean for us as traders? The conversation now is shifting from June to September. In other words, when are we going to get the next rate hike? This is not about the dollar rallying or ripping higher on June expectations, but rather September. So what does that mean to the US dollar? Is there room for the US dollar to move to the upside? I actually think there is. This is part wishful thinking and this is part tactical. If we can see the dollar rip higher, the market overall will look to sell the dollar. Now you might say, wait a minute, Rog, you're talking about a June hike and maybe also a September hike. Why not get long the dollar? Isn't that the play? A couple things here. Trade what you see. Take a look at the red grab candles and the 4 to 6 o'clock angle. These are tools that we use all the time to gauge the most important building block of every trade. What is the underlying psychology? What is the underlying market trend of what we're seeing on the daily time frame? That's the most dominant psychology. So if we can trade up into about 98, which is probably not likely on NFP alone, we might need some ECB help, but we could start closing the distance. So what I would recommend, and some of our traders have already done this, if they've bought calls on the DX or calls on the UUP to take advantage of that rip higher. The reason we go with the options is because if we're wrong tomorrow on NFP, if it's a big miss and the dollar punches down to a brand new low, all we're risking is whatever we paid for those options. On the flip side of this conversation is the number one way traders express an opinion about two currencies. This is the Euro-US. Now, if you don't trade Forex, no problem. You'll look at EC futures or the Euro FX futures contract. I'm not going to mention FXE here because when we get the non-farm payroll reaction, the FXE, the Euro ETF, will still be closed. It won't be trading. So you want to focus on the spot, the Forex, or the futures. If the dollar heads higher, what you want to do is look for an opportunity to buy the euro on a pullback. Now remember, don't overdo it here. Remember that there's a two-part play coming up within the next week. Tomorrow's non-farm payroll, that's step number one. Step number two is the ECB. Now we're going to talk more about the euro and the ECB, but what I want you to keep in mind is the US dollar is going to be strong if the euro is weak. And if the euro is strong, the US dollar will be weak. Keep that in mind. A lot of traders forget that relationship and end up on the wrong side of the trade. One of the strongest currencies that we're going to see into the latter half of 2017, you heard it here today, June 1st, is going to be the euro. The euro will be the relative performance leader probably by the time we wrap up summer. So you want to start thinking about how you can get long the euro and stay long the euro. And it's going to be opportunities like non-farm payroll that will set that up. So I don't want you thinking just about tomorrow, just about Friday, but I want you thinking about the rest of the year to come. This could be a monster trade, gang, going into the latter half of the year, and tomorrow might just be an early step into another entry long in not just the euro, but short the US dollar.